Welcome back, everybody. If you're new, my name's Nicholas and this is Investing Against the Grain. As you guys can tell, I'm still here in Spain. We're off the coast of the Mediterranean, Alicante. Been here for almost a week now. So I want to jump on to make this video. A lot of you have been asking me to talk about this. Essentially, how can you live off of your Tesla shares without selling your Tesla shares? All right. So I want to have a few disclaimers before I go into this to just explain a little bit about what I'm saying and what I currently do. Also, keep in mind the sun is setting here. You might hear some crickets in the background. So if you hear some noise, please ignore it. I do the best to edit all that stuff out, but can't do too much with nature. All right, so let's set the stage. Here tends to be the issue with investing. Okay. So you take all your money, you invest it, and let's say you invest in the stock market. All right, so you put, we'll use easy numbers. Let's say you have $1 million that you have essentially grown in the stock market. So you have that $1 million, but now you want to live off of that $1 million without really depleting it. Okay, so that's essentially the issue, right? We don't really want to sell stock because we want that to continue to grow, especially with a company like Tesla, but we need to live. We want to retire eventually. We need to be able to extract income for our daily expenses, right? Okay, so that's the problem. Okay, so that's the problem that we want to address. Now, there are many ways to live a financially independent life. There's many ways to go about receiving, I guess, cash flow, if you will, right? A lot of people like to use real estate. I'm also a big fan of real estate. I think it's a great way to build your wealth, especially early on in your career or in your life as an adult, right? But over time, as you get more and more savvy with finances, at least for me, I just gravitate more towards the stock market and having real estate be a smaller portion of my portfolio, if you will. So, but that is a way to do it, right? People can, buy all these houses, have, X amount coming in, $100 here, $200 there, maybe $1,000, maybe $2,000 in free cash flow. And, you add all that up, you aggregate it, and that's what they live off. That's one way to do it. But that's not really the life I live and, the way I want to move forward. So I don't do any of that, right? All of my real estate, I don't, it's not anything that's putting money in my pocket in any ways as far as cash flow, right? It's all essentially, just sits there and it appreciates, and it's nothing that I'm pulling money out from. All right. I also want to have a disclaimer that I still work. I talk a lot about this, right? I'm an engineer. I still work. And the reason I still work, is, even though I'm financially independent, is because there are levels to things, right? So there's financially independent. There is, people refer to the FIRE movement, financially independent, retire early. And, people talk about like lean FIRE, they'll talk about FIRE, fat FIRE, things of that nature. Well, in my case, I'm aiming towards fat FIRE. In other words, stupid net worth, right? And to be honest, if there wasn't a situation like a Tesla, right, where I feel like, if I just keep working, keep plowing money into Tesla over the next, 3, 4, 5 years, well, then I'm just gonna be better off, right? I'm still young. I'm 31 years old. What's another 3 or 4 years of working for me? Especially when I love what I do. I enjoy what I do. I love the people I work with. Why would I stop, right? I don't see it as work. I'm a engineer. I'm a tech head. So I geek out on this stuff. I love being in this space. So to me, it's, it's making a 6-figure salary and be able to still plow money back and buy more in Tesla. Why not? So that when I'm, in my mid 30s or, maybe when I'm 40, I live that fat FIRE lifestyle. So all of that kind of context talked about. How would I pull money out when I'm, say, 35 or 40, or whenever I decide to finally hang up the I don't know, the what do people do these? Hang up the tie, right? And not that I wear a tie to work or anything. I wear like flip-flops and t-shirts every day, and I work from home. But what would I do? Okay, so there's really only a few ways to extract money out. Okay, so the first one that most of you are probably familiar with would be something around the world, or the method of the 4 or 5% rule. If you don't know what it is, the 4% rule says that if you take your annual budget that you would need to survive all your recurring bills, your lifestyle expenses, all that, right? Everything you would spend in 1 year. You figure out what that number is, and you multiply that by 25. That's the number you need in order to extract 4% and be able to essentially live, financially independent in perpetuity. Now, this has a lot of assumptions in it, right? It assumes that you aren't going to be drastically changing your lifestyle. It assumes a certain percent return with your investments, which honestly, all of it's extremely, extremely conservative in my opinion. So that's fine. But the problem with this method for me is that it means selling. And I don't want to sell any shares, right? And I feel like that's where a lot of you are, right? Some of you might have, I don't know, let's say you have $5 million and you want to sell 4 or 5% to live off of. Well, it's hard to make that 4 or 5% selling, because if you sell that 4 or 5% today, in 2022, when we know what we expect in 2030 with Tesla, it's so hard to wrap your minds around it, right? So maybe that's not the best way to go about it. But before we go too far into this, let's also talk about this 4 or 5% rule, because another question that gets asked a lot is, how do I determine how much I need? Well, that is not a question I can answer for you. That's not a question anyone can answer for you, but I can tell you how to get those numbers. And it's not any of these like silly calculators people talk about where you take your highest year of gross income or net income, and that's what you try to live off. Like, that's silly. The best way to figure this out is to every single day have a tracking of your spending, okay? And you don't actually have to do it every single day. Look, the way I do it is I have a spreadsheet, and this spreadsheet, it doesn't change. It's the same thing every single month. And I update it maybe twice a month, maybe in the middle of the month and then at the end of the month, all right? And in this spreadsheet, it's all of my spending, every spending I do. And the way I track it is because I have my checking account and then I have 2 credit cards. That's it, right? I have 1 credit card that we use jointly and I have 1 credit card I use independently. And then my wife has her own bank account. She has her own credit cards. I don't touch that. That's her. She monitors all that. But our joint is everything that we do together. My independent is because I have an Amex and a Visa, so it's good to have both, because some places don't take American Express. And I have my checking account. So this is how I track everything, right? So that I have all of my spending constantly tracked. And I'll do it on the 15th, 14th, somewhere around there, and at the end of the month. But I track every single cent that leaves my bank account, every single cent that I purchase anything. Now, the reason this is important is because when I track all my spending, when I track all my recurring bills, when I track all of this, not only do I get a good sense of what I'm spending on a monthly basis, also a benefit of this is that I actually get to catch as well any odd changes within spending that might not be ordinary, right? So it's a great way to find fraud in your accounts. But anyways, so once I have this monthly understanding of what I'm spending, over the course of years, you start to really get an understanding of how much you're spending. So what you can do is you can aggregate that, divide it by the total amount of months, and really figure out where you are with a monthly spending. You can see if you have life creep going on. You can see how often that happens, at what percentage over the course of years, right? There's many ways you can use this data. It's powerful for you. And so what happens is, if you take that and you can, let's say that you're increasing your spending by 1 or 2% a year, or maybe you just stay flat, who knows? Over the course of 5 years of doing this, you're gonna have a very good understanding. And again, it's not that much work. You do it twice a month. You create one spreadsheet once. The only thing you have to do is at the end of the month, you copy and paste it, and you go from August to September. You go from September to October. And all I do is I'll put, for August, I'll put 8-22 for 2022, right? I've been doing this probably for the last 7 years, all right? I've tracked every cent I've ever spent, right? And that's with the current format. I've really been doing this for over a decade, but the current format I have is the one I've been using for the last 7 years. Anyways, so for me, using that, I'm very, very good at tracking or having an understanding of what I need for financial independence, right? And honestly, because of this, I was able to realize that I was financially independent a few years ago. And at this point, everything's just, icing on the cake, cherry on top. But for me, for my family, I'm trying to get to a generational wealth position, right? So I'm looking even further out. I'm looking for the bigger picture. Now, I kind of got off track there a little bit, but I just feel like that is so fundamental. You need to know your numbers, all right? Don't waste your hard-earned money on any investments, not even Tesla, until you figure out your own spending, all right? If you think that, oh, I don't have enough money to buy more Tesla or anything else, and this is the only time I'll ever in my life say that this is financial advice. You need to track your spending. This is paramount. Do not pass go. Track your spending. This is the place where you can really increase your yearly income, is by looking at what you're spending. You don't know how many times, on the 15th of the month or the 14th, whenever I decide to do it, I look at our spending and I'll look at my wife and be like, hey, we've been going a little crazy with eating out. We need to, bring it back down to earth, at least for the rest of the month. Let's spend this next 2 weeks eating healthier, going to the grocery store, and, watch our spending, right? It allows you to keep yourself in check from a health perspective, from a spending perspective, and it opens your eyes to where your money's really going. All right. I feel like I'm like on a pedestal here preaching about this. Now, the rest of this, not financial advice. All right. So let's get back to it. So let's say you figure out what that number is. And let's say you even figure out what the increase, what the delta is on a year-by-year basis, whether it's 2%, 3%, maybe it just stays flat. Once you know that, there's many things you can do. One, you can go by the 4% rule or the 5% rule. All right, essentially, you either multiply by 20 or 25, and that's what you need in perpetuity, right? There are so many studies going all the way back to the Great Depression that show that if you have that amount of your net worth, right, 20 or 25 as the multiple, that you will be fine in perpetuity pulling out that 4 or 5%, right? So there's so many, you can go Google this, right? Just don't take my word on it. Do your own research. There's so many YouTube videos out talking about these things. Okay, so now you know your number. All right, now we go back to the initial problem that we have, all right? You're like me, where you're invested only in the stock market. You don't want to sell shares, but you need to live off something. Okay, so what are our choices? Well, one, obviously, you can sell, all right? I would never, ever sell right now because I know where I think things are going to go. Okay, so what's my other option? Second option is you can take out debt. You can take debt out against your shares, right? There's pros and cons to this. The pro is that when you take out debt against your assets, you pay interest on it. Interest is not taxable. Okay, so you can essentially live off of a loan. This is a very popular thing that a lot of wealthy people do. Elon Musk essentially lives off his debt, right? He doesn't have to pay any taxes on any of the interest. Now, the problem is eventually you have to pay this debt back. Me personally, I don't like being in debt, right? The only debt I like is real estate debt because it's on a fixed rate that I can manage. And even right now, I would not even be looking at anything with real estate with the rates right now, the way they are in the United States, right? 5, 6%. If anything, I would wait, right? I mean, we keep seeing more and more housing data that shows that real estate pricing are coming down. I think today we actually crossed a technical recession within the real estate market in the States, that the real estate market's in a technical recession, right? So we're going to keep seeing that come down. And so then, by the way, that's another kind of sign that we might have actually hit a real bottom in July because they delay. Anyways, that's a whole nother video. So what is the other option? If you don't want debt, you don't want to sell anything, you don't have rental incomes, and that's not, your stick or the thing that you're into, well, there's another way to do it. So what I do every once in a while, just to pull out some money, is I will sell a put against my Tesla shares. So what does that mean? Okay, isn't that a bearish thing to a put option contract? No. If you sell a put, it actually means you're bullish on the stock. Okay, you know how many people talk about like a yin and yang to everything? There's always a buyer and a seller. Well, with options, there's actually 4. You got your put and you got your call. Calls tend to be bullish, puts tend to be bearish, right? But in reality, the put is not the opposite of a call. You have a put buyer and a put seller. The person who buys the put is the bearish person, the person who thinks that investment, that asset is going to go down. The person that sells the put is the one who thinks it's not going to go down, it's going to go up. So what happens when you sell a put? You collect premium. So for example, today, if I sold four put contracts in Tesla at say $900 strike price a year out, I could collect about $100,000 just like that. And so the question you really have to ask yourself, if you use this strategy, in a year from now, in 2023, August of 2023, do you think that Tesla will be below $900 or above it? You can almost consider it as just making a bet on black or red, but it's not quite that binary, right? The point is, if you think that it will be at least 1 cent above $900 in August of 2023, you get to keep all that premium, that $100,000, free and clear. Now, what happens if it's below it? Well, this is what's interesting. If we are at $899 a share come August of 2023, all that means is that you have to buy 100 shares of Tesla, or 400 because it's 4 contracts, 400 shares at $899. That's all it means. So there's really not a bad case scenario. You still get to keep that $100,000, so really you're getting those shares at a discount. Now, obviously there's a certain break-even point where you would be losing money, and you probably want to make sure you have that same amount of cash in your account so that you're not, it's called being naked, right? You don't want to get caught with your pants down whenever you're selling a put, because then you're going to have some issues, right? You'll get liquidated, right? And that's where you're going to have a lot of problems. You have potentially margin calls, right? That becomes a mess. But if you're selling covered puts, if you have the capital in your account already, which presumably you do in this example of being financially independent, having plenty of net worth, and you just not wanting to sell your shares, and if it's in a company that you believe in, like I do with Tesla, then you should be fine. It should be a very conservative approach. And again, you don't have to do it at 900. I'm just picking a number out there, right? Me personally, I would probably go $200 lower than what the current stock price is, just to build in even more wiggle room there, right? Because that means it would have to fall that much more when the company's growing this much more, and the odds of that are just so low, right? I mean, you can look up a lot of statistics on options to find a very conservative option contract that you could sell. Now, you could also do a combination, right? Maybe you don't want to really risk everything with selling puts because it is riskier than just selling a share, right? It's 100% riskier than just selling a share. You're collecting that premium, you can pocket it, but what happens if it goes against you? Well, then you can maybe split it up, right? I've thought about this a lot. Maybe I would sell, if we're going 4 or 5% rule, maybe I'll do 2.5% or 2% that I sell out of shares, and then I come up with the other 2% by selling a put. And that way I'm kind of hedging my bets. I'm still able to recognize that appreciation within the stock market while not being completely risky with what I'm doing. So those are really the only ways that you can benefit from your investment portfolio, your net worth that you build to live off of. So just to recap, you can sell shares, which for my strategy, I would not want to do. At least not for the next decade, probably even more. You could go ahead and take debt out against your assets. The problem for me, again, is that I really do not want to have to deal with paying or having a loan out there. I don't want to have to deal with interest rates that are probably not going to be fixed, especially if I take a loan against my assets, and it's probably going to be even higher than any of the current adjustable rate minimums, right? The prime number. And then you can always do what I'm talking about right now with selling puts against your positions. Now, the other benefit of selling puts against your position with a 1-year target is that 100,000, for our example, the 4 contracts, you would only pay 15% taxes on that, right? So you would keep that 85,000 because you did a year out. Those are called leaps. I forget what it stands for. It's like long exponentials. Yeah, I forget what it stands for. But a leap contract is anything over a year, right? And so anything over a year will fall under the long-term capital gain taxes, so you only get taxed at 15%. And actually, you can go all the way up to $500,000 a year with only getting taxed up to 15%. After that, that's where the rates start to go up to 20%. So I know you've asked a lot about this, a lot of questions about how this can be done, what are the options where I don't have to sell my shares, and those are the only options that I have come across. I've studied this for a few years now. I've looked into it a lot. It's, nothing I'm saying is revolutionary. You can find your stuff out there. If you guys are familiar with Chicken Genius, he's an amazing YouTuber from Singapore. Love his content. I believe he's back on YouTube now. But he lives off of selling puts. It's exactly what he does. People like Elon Musk, they live off of debt. And then there are other people that live off of just selling their shares. So really the options are open to you. No pun intended. All right, we're gonna leave it there. If you guys know any other ways or you have any other strategies, let me know down below in the comments. And I'd love to hear what you guys do, especially if you currently are in this process. If you're not, let me know which one of these would resonate more with you. Or again, if there's something else you've researched that you think would be a better idea. I'm open to new ideas, always looking to see how to iterate and how to find a better way to go about doing this without actually selling any of my own shares. All right. Appreciate everybody, especially if you stuck to the end. Hopefully this video helped you in some way and maybe showed you that there's another way to do things that you may have not been aware. All right. Again, thank you all. I'll talk to you guys next time, probably tomorrow. Love you all. Peace.